All right, Jesse.
All right.
Been a while.
Here we go. Yeah, too long.
Yeah, you good?
Yeah, all good.
Right. It's been a big week, and I read your Twitter thread where you're particularly pissed off.
Super pissed.
Yeah, and rightly so. And we should dig into that. And I think one of the reasons is you went through all of this with Mt. Gox. People might not know. You know, we've got a lot of new people, new listeners. Some might not even know what Mt. Gox is, what happened. But I know you flew out there, didn't you, to Japan?
I did. Yeah. Well, I flew out the first time that they got hacked in 2011.
Yeah.
The final explosion was 2014. But it seems like what happened in 2011 might have had a lasting impact on them. You know, what we think happened in 2014 was that they had actually had their private keys compromised at some point in the past. And that was their cold storage. And they kept using those wallets even after those keys had been compromised. So what the hacker was doing was he just kept slowly draining those wallets over time. And Mark just didn't notice. You know, he had this wallet off like in a vault, wasn't paying attention to it.
Right.
And so he was just like, oh, the hot wallet's too full. Let me just throw this into the cold wallet, not paying attention to like, you know, the cold wallet is basically continuing to get drained. So, you know, at one point the hot wallet was empty. He went to go get the cold wallet and the cold wallet was empty, but it should have had like 600,000 Bitcoin in it.
Unbelievable.
So, yeah, pretty crazy. But, you know, I think in total at the time that was like 400 million bucks. And, you know, FTX is 20 times that. So
yeah. And there's no Bitcoin to recover with FTX.
seems like not. Yeah.
Yeah. So for the context of people, what was the impact of Mt. Gox at the time? Did that feel like that was a threat to the whole industry?
Yeah, absolutely. So we were all super concerned about it. You know, I talked to Mark about it. You know, he was really trying to keep things going. I mean, he was extremely concerned about the impact on the industry of this blow up. And, you know, there were several efforts to try to like raise money to save them and fill the hole. But nobody could get it done, you know, and probably, it's probably better that it didn't get done because, you know, a lot of kind of like systemic problems there that, you know, might have just perpetuated had we filled that hole at the time. So I think sometimes it's better to just clean these guys out and like start over. But at the time, yeah, everyone was like thinking this is going to be a massive setback. And it was, you know, we had many banking relationships, you know, back in 2014, it was really hard to get a bank to work with you. And we were just on the edge of having, you know, several more banking relationships put together and other partnerships, you know, that just after Gox happened, everyone just kind of backed off and there was a massive chilling effect on the whole industry. Everyone outside of the industry was scared, didn't want to touch it. And it took years to recover from that.
Yeah.
Yeah.
Kind of a brutal experience to go through. And I think we got some good things out of it in that we got the whole movement of not your keys, not your Bitcoin to encourage people to self-custody. I mean, I wasn't around then, so I didn't go through the experience. But one of the things that stands out from that to now is that, I mean, what were we 8 years on from the...
Yeah, it was like Feb 2014.
And people still haven't received their Bitcoin through the legal process of having them returned. And, you know, some of these, if they recover assets from FTX, which I don't know if they will because we get onto the hacker, but this is going to take years again to unwind.
Probably, yeah. I think the U.S. bankruptcy could be faster than the Japanese bankruptcy. And there were some complications in Japan with, you know, because there was a hack, we didn't know if the data was reliable. There had to be an investigation. And hopefully that won't take as long here, but we'll see. You know, it's still not clear if there was a hack at FTX. But there are also like frivolous lawsuits coming after the estate in Japan. So you had like the CoinLab, Peter Vicenis suing for tens of millions of dollars, basically just opportunistically over some bullshit contract that, you know, like wasn't really enforceable, should not have been enforceable above the account holders. I mean, basically he's trying to sue for the balances of the users and saying that his business complaint with Mark should have preferential treatment above the account balances of the users, which is absolutely insane. But even if you could fight him out for years, he's basically saying like, hey, I'm just going to drag this out. So do you want to just pay me off to go away?
Is that still going on?
I think they've gotten rid of the lawsuits from him,
right,
or somehow gotten past them. I think we're on schedule to return funds next year, but like I've thought that for like the last 5 years in a row. So we'll see.
And that was based on Mark doing a deal with Peter to allow them to launch an exchange in the US, right?
Right. Yeah. It was basically for the US market, for like the brand, the right to launch their own exchange under the Mt. Gox brand in the US.
Yeah. Okay. All right. So we'll switch to FTX because there's a lot that's gone on in the world of Bitcoin and crypto since then. We've had fork wars and various other things, but the exchange world has been relatively stable. I know we had what happened with Quadriga, but what was that? 250 million was that?
I think maybe a little bit more than that.
But I know you dug into that one. And we've had some smaller exchanges, but nothing huge blowing up. And then we get to this year, and on top of what's happened with Luna and 3 Arrows Capital, we've now got FTX. But just before we get into that, obviously you run an exchange, and FTX is a competitor that kind of came out of nowhere and seemed to just, I don't know, just at such rapid speed become, maybe on the brand side, one of the world's most well-known. Mm-hmm. You, looking from the outside, were you suspicious with any of that?
For sure. Their rise to fame was very fast, and they were spending a ton of money. And we knew from having built our own exchange, over the last 11 years, that the things they were doing could not possibly be done responsibly, with the amount of time and staff and resources that they had. And so, from our perspective, there was something really sketchy going on there. I thought, well, maybe Alameda's making shitloads of money trading Bitcoin. And, I figured these guys could have built a reasonable exchange. But it was like the custody stuff that I was really concerned about. And, we've just seen in the last week as well, like another exchange accidentally sent $400 million to the wrong address as well.
But was it an accident?
Yeah. I mean, we'll find out, right?
Yeah.
Hopefully. But, I think there's some things that you kind of build over time. And, it seems like from what we know of FTX, it was just like a few people at the top that were doing everything with basically zero process, zero controls, zero accountability, like for anything. Like Sam could literally like cut and paste a balance on a spreadsheet and move money between FTX and Alameda.
Was that known, or was that something that people were just suspicious about?
I don't know if that's like totally known. I mean, people suspect that, and Sam has made some statements that kind of like allude to that, and having a backdoor and the ability to move funds without them being noticed by other people. So it does seem like FTX and Alameda kind of shared a common piggy bank, which was like the users' funds. And so, I think Kraken also, went through a phase when we were very small, just like 5 guys in a room where I could move the money around, or our CTO could move the money around. That's understandable when you're an extremely small company like that. And, I would tell VCs as well, who last year, were both looking at investing in us and FTX at the same time. And they would say things like, hey, you guys are, you're like 10 times the size of FTX, or your security team is 100 people. Why is your security team 100 people? FTX is only 50 people in total. So like Kraken seems very inefficient. And we explain to them like, look, like this stuff exists for a reason, right? We're not like sharing photos. We're trying to be like Fort Knox. We need to protect these funds at all costs. And that means, unfortunately, bureaucracy, protocols, headcount, having to build extra infrastructure to track all this stuff, reconcile accounts, make sure money isn't like silently bleeding off over time, identify where there's discrepancies. But you have to like build all this stuff. And if you're starting an exchange with a few people at the start of the bull market, and they got very lucky with the timing, which is another thing that really played into their favor, was the VCs would like look at their growth chart versus our growth chart, and our growth chart comes with several cycles of bull and bear markets, right? And if you look at it over a longer time span, it just doesn't look like a total hockey stick, right? It's like up and down. And FTX coming in right at the start of the bull market, their growth just looks like a hockey stick. And, the VCs are just like extrapolating from there, not understanding the cycles in crypto or any of that. And I think that also played very well into their valuation and all the hype, and allowed them to just fundraise basically with zero scrutiny, zero diligence. And you've seen like some of the statements from some of the VCs that they've made.
Sequoia.
Yeah, I mean like,
what?
Unbelievable, right? Like you guys just clearly did like zero diligence on this. You put your name on this thing. I feel like they got to have some accountability, because people look at that name and assume, oh, you wrote these guys a 9-figure check. You must have done some diligence. You must have looked at this, right, before you wrote off like hundreds of millions of dollars to them. But actually, no, they actually didn't. They just wrote the check blindly, basically. And I think a lot of people, unfortunately, kind of relied on that stamp of approval. They saw those VCs as being like someone did some diligence here and put their name on this. And unfortunately, they didn't. And I think that's the case for a lot of VCs. They're just kind of piling into stuff, playing the greater fool strategy, maybe. And people rely on that.
Yeah, it blew my mind, the Sequoia stuff, because you're looking at this and thinking, you guys surely are smart. You employ smart people. You've got experience of investing in companies. You've got experience of looking at data. It just smacks to me that they've got totally ahead of themselves, got excited and confident, and just said, yeah, fuck it, let's write a check. And
yeah, that is definitely the case for many investors, because we talked to many of the same investors, and that's literally what they said. That we just threw a check in because things were moving so fast.
FOMO.
Yeah.
FOMO investing. So I'm going to put your thread into the show notes. I think people should read it. I think there's two angles to your anger, though. Not only are you angry about what happened there, but I think rightly you're also a bit pissed off with the way the press is dealing with different companies and different personalities. And look, we can get into both, and we should get into both. But really, can you outline like the background to why you're so pissed off about it? Because look, firstly, there's a good argument for this is good for Kraken, right? This is good for Kraken. When you go and raise money, you can go and say, look, this is what happens when you put money into a new business that isn't established, that isn't experienced. And also, you've got a good argument for new customers coming in. I mean, I saw, you might have seen it, Travis Kling's fund, Dicker guy, they lost a lot of money in this, and that might be the end of their fund. And for someone like that, I mean, I'm not going to get into the details because Travis is a friend, and that's a terrible experience for him to go through. But other traders now, trust is going to become an important thing. And that could be obviously a benefit to you. But at the same time, I guess this puts the industry back. So how do you square those?
Yeah, I mean, it's always nice to get a bad actor out of the industry. Obviously, it's nice to get rid of a competitor. But we never sought to be like the only exchange that exists. And I think that when we're fighting these battles in DC, having more voices is better. And obviously, part of the reason for creating Kraken in the first place was what happened with Gox in 2011. And when Gox went offline for a week and a half due to a hack at that time, the whole industry was shut down. We had no price discovery. Merchants couldn't accept Bitcoin. It was a massive problem. And I thought, we better have more than one exchange just in case, so this doesn't happen again. And I think for the industry, things this time are just moving on, right? We have a bunch of exchanges. There are a bunch of other places people can go trade. It's almost like FTX was never there except for this $10 billion crater in the ground. And yes, Kraken's getting more users signing up now than we were 2 weeks ago. We're also getting more funds coming off of the exchange, which I think is great. I think people should get their money off of exchanges. I think people should spread their money around, not have it all concentrated in one place, and self-custody as much as possible. So, I'm not concerned about that. We don't get paid for holding people's balances. It's just like strictly a liability for us. So, I only want your balance on Kraken if you're going to be trading with it. Otherwise, it's just sitting there as like something for me to possibly lose and I'm getting no compensation for taking that risk, So, on one hand, yeah, it's probably, it helps us in terms of our relative position in the market. Maybe we're in the top 3 exchanges now instead of whatever the top 4. So that's nice. But yeah, to your point, about the broader industry, there's going to be another chilling effect, I think. I think that the media cycles, once they get over Sam, and stop writing these puff pieces, if they ever will, the real story is going to come out, and this is going to be extremely negative. I think it's going to turn off retail investors. I think it's going to cause politicians to overreact and feel like they need to do something to clamp down on the space, which could just be bad for everyone. And it could send us into an even deeper, protracted bear market and winter. And I mean, just in the last week, the prices have come down. We hold a lot of Bitcoin and Ether on the balance sheet, and the prices are all down 25% from a week ago. So that's not great. I think it could be a while before we recover from this. And, there could be more contagion. We just saw BlockFi, and, there's probably anyone else in the lending business, I would have my eye on right now, because there's just so much contagion and like interconnectedness of these lenders and the collateral they were using. And many were not, were giving just fully uncollateralized loans on the basis of someone's reputation. And FTX had a pretty great reputation, which was bought with client funds, unfortunately. But a lot of people, who should have known better said they extended FTX a lot of credit, or they just left a lot of money in FTX because they felt like this was unfathomable. Like the outcome they were worried about was a hack. They didn't think that it was possible that basically Sam was running a Ponzi, the whole time.
Yeah, I think the speed at which it collapsed is what blew my mind. I had no suspicions about FTX. I never used them, never signed up. I might have registered once to look at the interface, but I never put any funds on it. Didn't have any interest in it. But I was impressed by the speed at which it grew, the sponsorships it took out. I just felt like, this is impressive what they've done. But I didn't have any suspicions about it being a Ponzi or what was going on. I mean, never really looked at it. But from the rumors to the collapse, the speed at which that happened kind of blew my mind. And I'm wondering, who knew? Mm-hmm. Because my assumption, you can help me with this as somebody who's taken investment in, but my assumption is someone like a Sequoia, usually, if they're a lead investor putting money in, do they get a board seat? If you get in a board seat, aren't you doing constant diligence?
My understanding was that they gave away no board seats in the round. I guess they just managed to generate enough hype. It could also be that people didn't want a board seat because they really didn't want to know how the sausage was made. And, maybe they're afraid to find out. So, I think it's actually somewhat difficult to find really great board members in crypto because people don't generally understand the risks or, don't want to have that level of responsibility.
Do you think this was avoidable?
I don't think the world needed FTX to exist. I think there are plenty of great exchanges that have a proven track record. I mean, so from that perspective, I think we have to ask, like, why do they exist, and what is it that they did that no one else was doing that filled a hole in the market? And I think this goes back to the problem of regulators and regulation by enforcement. And FTX's primary innovation, in my view, was doing things that basically no one else could get away with because they were too heavily supervised or too heavily regulated, because of kind of all the license accumulation and all of the interactions with regulators over the years. As one example, Coinbase went to the SEC asking for permission to do this, it was 3 or 4% yield product.
Yep.
And they got rejected, so they never launched the product. Meanwhile, FTX is offering basically the same service to Americans from the Bahamas with 10% yield. So, what is the regulator doing there? I mean, they're basically saying, okay, if you want this product, you're not allowed to get that product in the United States. You're not allowed to use a trusted, reliable, proven platform like a Kraken or Coinbase. And in fact, you've got to go offshore to get this. So people did. And, I think that was why FTX existed because for whatever reason, the regulators like to pick on the guys in their backyard, and they've explicitly said, we say like, hey, why are you hassling us about this? There's like 20 other exchanges doing the same exact thing. Like, why are you bothering us? And they'll say, well, you guys are convenient. If we want to subpoena them or we want to go after them, well, they're in another country. It's very difficult. It's a hassle. We're just interested in putting notches on our belt. And you guys are within striking distance.
But they have been pretty good at scaring companies off offering services to Americans.
I don't know that they have. FTX, it was very easy to get an account there as an American. There was a time where KYC was almost non-existent there, where they're not checking for VPNs. I wouldn't be surprised if we found out that 50% of their users were Americans.
But they went after Arthur Hayes.
Yeah, I know. Maybe they would have eventually gone after Sam and FTX as well. But obviously, it doesn't take that much time to build a bunch of balances, and lose them. And Sam was very heavily donating to.
Well, that
the powers
would
that
be
be.
my next question. Do you think that helped?
I'm sure it did. Bernie Madoff was doing the same kind of stuff, schmoozing with these guys. The SEC even went to investigate him and found nothing, even though it was right under their noses the whole time. So I think, if you just look at Sam's resume, he looks like a guy who would never scam anybody, right? He's got this great education, this great family pedigree. Family's very well connected. Why would he scam anybody? And it makes me think that, this probably was not what he set out to do originally, is steal a bunch of money, because he seems like he's already pretty well off and doing fine in life. It actually makes me think more of these conspiracy theories, which is that, this is some kind of like Fed op to take down Bitcoin, because there's just so much contagion here. If you wanted to really screw the ecosystem, this would have been like the perfect way to do it, right?
Yeah, but the contagion exists also because of the likes of what Voyager were doing, what 3AC were doing. I don't think FTX on its own causes so much damage. It's because so many people were doing such reckless things.
I agree with that, but there is still a $10 billion hole that maybe belongs to 1 million people. So that money has been extracted from the ecosystem. Where did it go? I don't know, to sports sponsorships, to the Democratic Party. Who knows where else that went? Real estate in the Bahamas.
Yeah.
That's $10 billion that we don't have as an industry, as a community, to put into other projects to move our industry forward. That's just stolen from us. So there's that. And also, they were prolific investors. They've been investing in everything. I think they have like 400 something investors.
You've got that chart.
Oh, yeah.
Oh my God, it's unbelievable.
Are you talking about their org chart or just like their investments?
The org chart.
Yeah, the org chart is also insane. It's like a maze inside of a spider web. It's but so they've invested in so many companies. I don't know if you heard this, but when they made their investment, they required those companies to keep those funds that they invested on FTX.
Yeah, look at that.
Yeah.
I don't even know how you begin to read that.
Or manage it.
That's insane.
Like, how do you
And how many people do they have in the whole company, right? They got like one person per entity.
Well, it's 50 people, they said, right? Or is that 50 FTX and then?
Yeah, I guess they're probably split up between Alameda and who knows how many of these.
But I think
companies.
it was 132 entities or something they wound down in the end.
How many entities do you have?
I think we have. This is a good question, because we do have entities out there that are like they own a license for a particular country or something like that, but it can't be more than like 20 entities.
And you've built that up over 10 years?
Right, yeah.
And there's a lot of work in integrating that, in reporting lines, in accounting.
Yeah, for sure. It's a total headache, and sometimes we shut entities down because, if we created it for a particular purpose, a geo, and maybe the market's just not there, we might just wind it down and close it, because there's overhead in carrying that. You got to file taxes for it. You got to do reports. There's headcount associated with maintaining those entities, so you wouldn't just do it for no reason.
And over that period, over that 10 years, you're building up experience, you're learning and making mistakes. You're never a complete product. I'm assuming yourself, you're still learning things now.
Yeah.
And how then I think to Google when Larry Page and what's the other guy? He invented
Sergey
Google.
Brin?
Yeah, Sergey Brin. They realized they couldn't run the company. So they brought in a CEO. Yeah, here we have a guy who's got no real experience running companies, who is being given hundreds of millions. It looks like his board is made of children, and what they're now able to understand how to run human resources for the company to scale a company this size. I'm not buying into the conspiracy. I'm going for the simplest answer. Is probably what it is that they built something, it grew quickly, they got out of their debt, they made some mistakes, they built mistakes upon mistakes, and the whole thing crashed down. That's what I think happened. People say, oh, he was connected to this person, therefore there's the conspiracy. And I'm thinking, well, maybe that person is what allowed him to raise money because he had those connections. So
Right. Yeah,
I'm going for
like
the simplest version.
kind of situation.
Yeah.
Yeah. I agree with your assessment. I think that's the most likely answer. The question in my mind is, when did this become a Ponzi? When did it go from being a legitimate business to actually starting to trade or misappropriate client funds?
Yeah, that's hard to know, and that's hard to know where the first mistakes came. I mean, what stands out to me is obviously Alameda were terrible traders, like fucking terrible traders if they built that big a hole. There's a lot to be suspicious about with the FTT token. There was the token before it as well, wasn't there? Sovereign or something? I can't remember.
Serum,
yeah.
Do you think it was most likely around the Luna collapse that it all started going wrong?
It does seem like that was like the big domino that like kicked everything off and started this cascade of effects of because this is like so incestuous, like everyone had loans with everyone and everyone was using everyone else's like bullshit, like fake token collateral for at 100% market price. So I do think Luna kind of seems like it was the first domino there.
Is in terms of Kraken, and you've seen this lens of what everyone's done and all these mistakes. Actually, let me ask a different question. When FTX were blown up quickly, you see a competitor, and it's like with the competitors, you want to go, well, what are they doing right? Like, why is this happening? What can we learn from them? We don't want to lose ground to them. When you were looking at them, is there anything you were looking at and thinking, yeah, actually, they're doing this particularly well? Yeah,
there's some things they did very well. I think the way that they constructed their futures contracts was good. I think that, they had a pretty good trading interface. They were doing stuff that people wanted, obviously, like prediction markets. I thought that was really great. So they're doing a lot of cool stuff, and stuff that I would bring to our lawyers and be like, hey, they're doing this. Like, I wanted to do this 2 years ago. Like, what's going on? Like, how are they able to do it? Like, find out how they're doing it. And they would just come back and be like, yeah, this is like straight up illegal. They're just like, they're going to go to jail at some point. So I'd be like, okay, like, well, how do we make that happen faster? Because they're stealing all of our business right now, or, tell me how we're going to somehow compete with this. And, I think they did a lot of things right in terms of they found product market fit. They built stuff that people wanted. It was just stuff that unfortunately other venues could not offer because of the legal restrictions.
So where does this put you in thinking about regulation? And I think this is a tricky area. Yeah, a lot of Bitcoiners are anti-regulation, naturally. They don't want anything from the government to be told what to do. We're in a moment in time where there are regulations here, but you can clearly skirt them by setting yourself up abroad, which makes the US kind of anti-competitive. It creates an uncompetitive market. So one answer is to deregulate this market within the US. But in doing so, when you deregulate it, you also open up the opportunity for more scams to be created. Like, where do you, as somebody who's dealt with regulators in DC, where are you in this whole picture?
Yeah, I think it's a good question as to whether the regulations have actually prevented scams from happening or not. I would love to see some kind of data on that, proving it. And, going offshore, it doesn't mean you are not captured by the regulation. Just so happens that you're less likely to be enforced against. Like, they're less likely to come get you if you're offshore. So the effect it ends up having is basically just it's illegal in the United States and de facto legal everywhere else because you're just too hard to go get, or they're too lazy to come get you. So that's a huge problem, and I think that the U.S. I think as a nation has to decide what its national policy on Bitcoin is going to be. Do we care about owning crypto basically as a country, in the way that we kind of own and control the internet. And do we want to be a player here, or do we want to let some other country that has better laws be sort of the central epicenter of everything happening in Bitcoin and crypto broadly? And we can either, I think we need new laws. The existing laws are bad. They go back 80, 100 years, pre-internet, when no one imagined the internet. They're talking about, commodities, oranges, onions, stuff like that is like what they're concerned about. And we take those laws and try to apply them to what's happening now today in crypto. And they just don't fit. It's really trying to fit, this happened with Skype too, as well. Like they couldn't launch because everyone was saying, well, these guys are a telephone company, right? And clearly they're not. But they were trying to fit Skype into that hole. So I think we've seen this a few times over history. I think you either have to back off as a regulator and just say, all right, we're not going to control this. We're just going to back off and allow U.S. companies to be competitive here, and just hope that they stay here because, the whole reason we set up in the US was because we felt like it would earn us more trust. We felt like most of the early adopters would be Americans. We felt like, being here under the US legal system, and I think the legal system is one of the best things the US has going for it. And FTX even filed for bankruptcy in the US. We felt like being here would earn us a lot of trust. It was a better legal system, and that was important to getting adoption. And I think they could do that. That would be one way. So just back off, and we'll see if more scams happen, or if when good players are able to be competitive, if scams don't have a place to find a foothold. If they're not able to offer something that these legit businesses can't offer, then maybe they won't be successful. Maybe they won't be able to attract people, because people go to the scams because they just can't get what they want at the place they trust. Like if I could have traded Bitcoin at Bank of America, I probably would have never had a Mt. Gox account, So that's one path. The other path is they've got to start enforcing globally. And that's a big ask. Obviously you can set up a Bitcoin exchange in your parents' garage from anywhere. You don't need a bank account. You can take USDC or Tether or just Bitcoin and Ether. You don't need to have any kind of connections to the legacy world of gatekeepers. So that's a pretty big ask, is to go after everyone globally. But maybe you just do enough of it and you turn away other people from trying. But they've done almost none of that. So we're sort of in the worst of both worlds right now, where stuff that people want and are highly demanding and are going offshore to get is illegal in the US, illegal in the regulated markets broadly around the world. The UK is the same, Australia is the same, Japan's the same. In some geos, you have to ask the regulator permission before you even launch a product. So, Japan is one example. They restrict the number of the tokens that are allowed to be traded. And if you want to trade a new token, you have to go get approval. They might take 6 months to evaluate it. So that puts Japanese exchanges at a huge disadvantage globally, right? If you want to trade the hot new coin, the regulator's sleeping on it for 6 months. Meanwhile, you can trade it at FTX in the Bahamas like right now. So what are people going to do, right? Even if they want to support a domestic business, if you want to trade that asset, you're forced to go offshore. So I think we got to pick one of these strategies and go with it, because right now we're just kind of forcing consumers into these sketchy operations, that don't have a proven history. They're not working with regulators, and people keep getting hurt. So I think that strategy's failed.
Although you say that, they still could have got hurt in a deregulated market with FTX just being in the US if their practices are still the same.
That's for sure. But FTX might not have been as competitive. Imagine if Kraken, Coinbase, and Gemini could do everything that FTX was doing.
Right.
And we had an 8-year head start on them. Would they be able to just pop out and do what they're doing and actually be competitive?
So it was the regulatory arbitrage they pulled.
Yeah, it was more so, regulatory arbitrage usually refers to you can get away with something in one geo. You know, like an example would be there's something called reverse solicitation, and I think Australia might be an example of where this works. So there are many countries where this works, where they say you can't offer this service from our country, you can't market it in our country, but if you're offering it from whatever, Cancun
Bahamas.
or Mexico or whatever, yeah, like you, and you don't market here, but people go to you, they proactively find you and seek you out and go sign up with you, then that's fine. Like the US doesn't operate like that. The US says, we don't care how an American got on your platform. If you took them on, then that's your problem and you have to follow our rules.
Right.
But many other countries say, well, if they found you on your own and you're not marketing here, then like that's on them. So this is mostly a problem for the States. And so, you know, they may have, I would say like they employed regulatory arbitrage for much of the world, but that doesn't really work for the US.
Right.
You know, the US would still say, you should have been following our rules, even if you're based in the Bahamas, it doesn't matter.
But they weren't.
Yeah, they weren't. And,
Yeah.
and you know, I think we'll find out if criminal charges come as a result of that.
Yeah, that's another thing that seems to be quite interesting is that with everything that's happened this year, we haven't really seen people getting arrested. Look, I know a couple of people have fled to Dubai where there's no extradition, but at the same time, I would have expected SBF to be handcuffs right now.
Yeah, well, it took a little bit for Mark to get arrested as well. You know, I think I'm surprised that the FBI is not up in there confiscating laptops and like servers and stuff. You know, I would have thought that they would do that kind of immediately.
Yeah.
Maybe there's also some kind of jurisdictional issues going on there. Maybe it's Sam's political connections, his family, you know.
Made a few phone calls.
Yeah, I mean, it is really strange. You know, he seems to be given the benefit of the doubt that the piece that we saw in the New York Times was just like, I mean, it's
Come
like,
on.
boo-hoo, oh, a billionaire, he just like, you know, fumbled the ball, lost a little bit of money. Like no mention of like, you lost 1 million clients, like $10 billion.
Yeah.
You know, so, I mean, he's clearly got the mainstream media on his side. He's probably got a bunch of friends in Washington. You know, maybe they're looking out for him.
How do you get the New York Times on side though? Because the New York Times must be aware that, you know, when you put an article out like this, you're gonna get criticized. What is the upside to the New York Times to do such a puff piece?
Well, this guy that wrote this piece, he had also written the hit piece on Kraken, and I think he covered Coinbase as well. So it's only been negative pieces. I mean, across tech.
It's not. What's his name? Is it the guy who wrote Digital Gold?
No,
It's not Popper.
no, it's not Popper.
Because he did another hit piece on. Was it Coinbase?
It was David Yaffe Bellany.
yeah.
Because Popper did another hit piece on Coinbase.
Oh, really? That's unfortunate.
I don't know if that was it. He might have been at Washington Post. I'm not sure.
Well, yeah, this guy, I mean, he's a young guy. It sounds like he went out and spent some time with Sam in the Bahamas, and he's talking about FTX condoms and stuff. And like, you know, who knows? Maybe he got wrapped up in the orgy situation there, and
Got some amphetamines. And
yeah,
had a party.
I mean, maybe Sam has some dirt on this guy. I don't know, but you know, it's odd that the New York Times generally attacks tech, and they've attacked Kraken and Coinbase, and you know. When FTX loses $10 billion of client funds, it seems like, you know, explicitly stole them. They write this piece that like doesn't even mention anything about that. So it's very odd. I mean, it seems like the Times is or this particular guy and whoever the editor is captive somehow, you know, by somebody, or you know, or they're trying to protect their friend. You know, I mean, maybe, you know, Sam is very. I think his at least his stated views, at least the front that he's trying to put on, you know, looks like something that the New York Times would be aligned with.
Well, I think it's bullshit, personally. I read the piece attacking Kraken. Didn't like it. I think I commented and said something to you about that. And I saw the piece yesterday, and it's a puff piece. I'm following his tweets, which are coming across as quite psychopathic. Have you read the latest ones? He's trying to save the world and make everyone whole again. So moving forwards, and knowing what you know about DC, I mean, you've had to employ people to help with lobbying efforts.
Policy team, a lobbying team ourselves. It's growing. Unfortunately, it's probably gonna have to get a lot bigger thanks to this. I think the blowback in DC is going to be big. I think they're going to try to attack the industry. There are a lot of politicians just, waiting for anything to attack crypto, any excuse. And this is a gift to them. And, I think we as an industry really need to come together and, stop fighting each other. It can't be about Bitcoin maximalism versus, proof of stake or any of that. Like, this is a time where, like, we got to be solid together in DC, like all on the same team, because they're coming for us. And they're going to try to paint this as like crypto failed, DeFi failed. It needs to be regulated. This all has to go be managed by BlackRock and Goldman Sachs. And that's obviously not what we want. And we know that's not right. We know that this is like, just as Bernie Madoff was not an indictment of the stock market or, equities, this should not be seen as an indictment of crypto. It just happens to be that the tool that the scammer used to steal from people was crypto. This is about fraud. This is about a scammer, and it has really nothing to do with crypto, but they're going to try to paint that story for sure. Yeah,
that's a massive uphill battle to try and get everyone to come together. Look, my show's a Bitcoin show, as you know, but I happily had Kraken as a sponsor. I only talked about Bitcoin. I know when this show goes out, there'll be a bunch of people listen to it, really enjoy it. And then I know in the comments on YouTube, there'll be, why have you got a shitcoin on here? There seems to be very little ability to get people from the maxi side to come across and say, let's work together. And that's fine, so be it. I mean, they think everything that isn't Bitcoin is a scam. And when things like this happen, they will point to that and say that. I don't think you're going to be able to get people to come together on it. I think you're going to have to fight that battle as it is, because I think some of the maxis will see you as part of the battle because your exchange isn't Bitcoin only. Mm-hmm. So I don't know how you make that change. I don't know if you can.
I'm still waiting to find out how we can have a Bitcoin only exchange, because there's not much demand for Bitcoin pairs. People always say, like, why don't you delist all these shit coins? And I say, the dollar would be the first thing I would delist as a shit coin if we could still have a business and still make money doing that. I think people don't get that. I don't think there's enough money to be made as an exchange, maybe as a broker. And there are many successful brokers that just only sell Bitcoin, and that's fine. But what it takes to operate an exchange is very expensive and requires a lot of smart people. And I don't think there's enough money to be made only trading Bitcoin versus fiat currencies. And so I think people ought to think about it like these other coins, they might be shit coins, just like, maybe most of the stocks on NASDAQ are shit coins. But they effectively subsidize the cost of offering, a Bitcoin exchange. Like for the good stuff, they pay for the security of it. They help pay for the licenses. And so, I think that, personally, I think most of them are shit coins, and I personally would not hold them. But, that also goes for most stocks as well. But, I'm often wrong about the market, and that's why we exist. We exist for price discovery and for people to trade their disagreements. And, I don't take like a moral position on, which coin is better than others. Personally, I think Bitcoin is going to be like the currency that sort of becomes the global reserve currency. I thought Ether had a shot until it flipped to proof of stake. And now I think, I'm a little more skeptical of it for that reason. But, I think all of these things, they have their place. Some of them are experiments. We try things out, we see what works. Maybe we can pull that back into Bitcoin eventually.
If it was Bitcoin only, it's the point you're making is that these multi-coin exchanges will still exist globally, and therefore there won't be any competitive companies within the US who have enough money to be able to grow the industry, compete, and work with the regulators. Mm-hmm. Is that what you're basically saying? Yeah,
I think that if we were Bitcoin only, we wouldn't have a treasure chest to go and lobby for regulation to protect Bitcoin, right? So, I mean, I'm probably starting to sound like Sam right now, but if this is like a, an effective altruistic kind of like statement, but we make money from trading shit coins, and that money goes to pumping Bitcoin, basically, defending Bitcoin. And, maybe it's a necessary evil, because we wouldn't have that money to buy those arms, those weapons for the battle for Bitcoin without that.
I think we're in a similar position in some ways. People are like, why do you have that sponsor? They're not a Bitcoin only company. The ability to take this team around the world and make this show is the fact that we work with companies who also have crypto. We don't promote their products. We only say buy Bitcoin here, but that gives us the budget to do this, to take a team around the world, to have this equipment, to produce a great Bitcoin show. Mm-hmm. I do wrestle with it. I mean, I'm sure you've wrestled with it as well.
Yeah, I don't tell my family to buy shitcoin number 5,000. I'm just saying, like, basically buy Bitcoin and put it away, and like don't look at it for another 20 years. But I think we got to appreciate that these other coins are generating a bunch of revenue, which does ultimately fund Bitcoin stuff. Stuff that's getting the show out, getting us to lobby in DC. The massive security team that Kraken has that protects Bitcoin. So I hope that whether you're a Bitcoin maximalist or not, I think you can think Bitcoin is going to be the world's reserve currency, and you can think everything else is a shitcoin. And I think at the same time, you can say, like, look, they're coming for all of us together. And if we're on the side, like fighting each other when they come, we're just going to get screwed. And, for the sake of the future of the space, I think Bitcoin alone doesn't have enough firepower to win this. And I think we gotta use everyone's troops together.
I wanted to talk a little bit about proof of reserves. We're about to, do you know the company Hoseki?
Hoseki? No.
Yes, a new company that's launched. We're about to use their software for our football team to show the proof of our little treasury and our little charity arm of our football club on our website. And that's a really cool thing to have. And everything that's happened with especially the lending platforms, there's been talk about we need more proof of reserves. There's also a stream of commentary on that coming out saying, well, proof of reserves is a scam because how do you prove it? It's not a live feed of what you have. There's no proof of liabilities. You talked about the exchange sending 400,000 of ETH to, I think it was it crypto.com to
Gate, I think.
To Gate. Mm-hmm. And it happened just at the day before they did their proof of reserves attestation.
Yeah, I think it worked. The timing worked out to where it wasn't actually included in the the audit.
Okay.
Yeah.
But the point being is, could you do that? Could you do a proof of reserves? And can you cheat proof of reserves? If you don't have a live feed of your reserves, that's an auditable live feed of your reserves and your liabilities, what use of proof of reserves? Actually, could that be used to kind of gaslight people that you do have the reserves? Well, I know Kraken has done a proof of reserves.
For sure. Yeah, ours is combined proof of reserves, let's call it proof of assets, plus proof of liabilities. So those liabilities being the client account balances. So we use this Merkle tree system basically to generate this cryptographic proof that basically all of the client balances were included in the audit. And then separately, we sign a message from all of the wallets that we have that show that in aggregate, we have more coins than we have client liabilities in their accounts. And yeah, that doesn't say that, we haven't on the side, taken out some huge uncollateralized loan from, someone else or something like that. Or we don't have some huge debt somewhere else. So that's definitely a fair criticism. And yeah, you shouldn't ever take any kind of proof of reserves to mean that you have a complete picture of the business. And obviously, even in the traditional markets, this happens, right? Like you have Enron situations where you can just hide stuff, and you don't really know if a company's solvent or not. Especially not a company with 300 entities underneath it. It's just very hard to look at all that. So. And you just can't prove a negative. You can't prove that something's not there that people suspect is there. So, yeah, for us, we think this is a good start. It's better than nothing. But to take some of the client account balances and some of our balances and just show that we have at least that much money. And You potentially could fake that for a one-off, but if you do these over time, more frequently, it's harder to get away with because you have to every time, if you were going to say borrow some money to fill a hole that you had, you might see that happen on chain. You might see, right before Kraken's proof of reserves, they strangely, a bunch of money came out of Roger Vere's wallet and then into Kraken and then went back to Roger Ver 2 days later. You could see that stuff happen. So, if we just did one, maybe you wouldn't see it happen because we have a bunch of time to kind of like stage that. But if it's every quarter, if it's done randomly where, maybe there's something on chain that says like picks the time, anytime in like a 3-month period or something where the chain chooses like, okay, now you're going to do your audit today. I think that would be a good way to do it, to put somebody on the spot and then you can monitor,
Is there any scenario where customer funds could be protected in a scenario where, say, an exchange was facing financial difficulty, was looking at bankruptcy? Because what I didn't realize is when some of these scenarios, when they go bankrupt, the customer funds aren't the customers first. It's actually the creditors that will be paid off first.
It depends on the geo. Yeah. So this is like something that was addressed in Wyoming with the SPDI was that creditor or the account holders are first and foremost the creditors, and you have this separation of the balances from sort of like the business liabilities. So it really depends on the geo. And I think this is also something that we could use more clarity on in many places. I don't know what the rules are in the Bahamas, but that certainly should be something that people are thinking about when they put their money with a custodian is like, are my funds going to be mixed up with every other business creditor that this company has, or, are the client funds separate and senior?
And what do you think the future is of custodial services? Because very clearly people have been coming out and saying again, not your keys, not your Bitcoin. At the same time, some people don't want to custody themselves. Certainly large companies might not even be able to custody themselves because of the rules.
Yeah.
What do you think the future is for custodial services?
I think hopefully people demand more, but I thought after Gox that everyone had learned their lesson. But I think what we've seen is so many new people came into the space during the last bull market. They had no clue about Mt. Gox. They weren't digging into the history from 6 years ago to find out, what had happened before them. And so I think people just didn't have that burnt into their minds, like a lot of people that have been around. So I think you'll still see, even into the future, people that come into the space 2 years from now might have no idea about FTX.
Yeah.
Much less Mt. Gox. And so they're going to be ready to learn their lessons all over again. I think they'll be trusting of custodians because, when you go set up a bank account, you're not thinking about, is Bank of America solvent? When you do that, you just presume, oh yeah, they're like a legit bank. So,
well, you have your FDIC protection anyway.
That's true.
We have it in the UK up to £80,000. You're protected.
Yeah. So for most people, that's definitely enough to cover their account. So yeah, they can feel pretty good about the bank that they're going to. You don't have that in crypto, and there's some confusion about this too. I think is what kind of insurance crypto companies have, and for the most part, it's pretty much zero. The FDIC covers. There's some exchanges which claim to have FDIC coverage, but the FDIC coverage covers a bank failure. So that would be like, in the event that Silvergate fails, if we had money at Silvergate, we could get $250,000 back from Silvergate, for example. But it doesn't have anything to do with the exchange getting hacked or the exchange stealing money or anything like that. That FDIC doesn't cover really anything related to the exchange's business. It's just like the other custodian who's the bank that might be holding on to dollars. So there's some misunderstandings there, but yeah, you're right about the banks, and we don't really have anything like that for crypto, and there really can't be anything like that because who's going to print a bunch of extra Bitcoin when you lose it all? So that just doesn't exist. The insurance to cover for hacks and things like that is insanely expensive.
Do you have it? Do you use it?
We have a very low amount of insurance, yeah. But it's mostly to cover against like lawsuits and to protect the directors from individual lawsuits and things like that.
I guess your insurance is your 100-person team and Nick Pococo. And
yeah, pretty much. I mean, you've really, and we've seen in the space there have been other venues that have insurance to cover cybersecurity, and they've been hacked, and the insurance company just fights them on it, like to the death. So even if you have it, there's not a guarantee that you're actually going to get the payout in the end, and the fight over whether you're going to get the payout could take years as well.
You still getting insane levels of constant attacks. I mean, we spoke about this like 2 years ago. I can't even remember when was Nick Picoco?
I bet it was longer than 2 years ago.
Yeah, and one was the volume of the attacks, but also the kind of inventiveness of the attacks was kind of crazy. Is it just still the same, relentless?
Yeah, pretty much always the same. I mean, there's always like bots scanning the website looking for things like that. They're always testing whether we're vulnerable to some 0-day. I think the biggest risk is the people angle, like having a person, an insider, become compromised somehow. So, we've also got systems to kind of track for suspicious behavior occurring inside the company, people trying to open files or things like that they shouldn't normally be looking at. So, I mean, there's a ridiculous amount of stuff that we've built behind the scenes to try to track all this. And, I think you can never be 100% invincible. Yeah. You just kind of got to hope that you have enough controls and monitoring in place that if someone does get in, that you kind of catch them before they get too far.
And I can imagine both Coinbase and Gemini have similar large security teams like you. And I guess then when you look at FTX and you're thinking, well, what did you have?
Right. I mean, the team is so small that they couldn't possibly have had enough of a security team to protect what they were responsible for, which is, tens of billions of client funds.
And now it's being hacked anyway, post everything. I saw today, was it 200 million of ETH or something?
Well, yeah, if we can believe that was a legit hack, I think that's
inside job.
Could be an inside job. Could be somebody covering their tracks. One thing that happened with Gox was because there was a hack, we couldn't trust all the records, so it might be to cast doubt on whether the logs are accurate. Maybe the hacker at some point is going to delete all of the systems, and conveniently there'll be nothing for law enforcement to investigate. I'm kind of skeptical of a hack occurring now. If this is the first hack, if it's not the first hack, I mean, if this is occurring now for the first time, that's what they're saying. I would go back and look and see, like, did these guys actually have access to your systems for a long time? Was there another hack that actually created this insolvency earlier? But it seems unlikely that they would just be hacked now for the first time.
When all this first went down, I don't know if you can talk about this, but when the FTX stuff started falling apart, I saw Nick Picoco tweeted that there'd been a hack and that they knew who it was. And was it because someone tried to cash out through Kraken?
Yeah, there was some movement on an account on Kraken. We don't know if it was the hacker or not, or if this hacker is even real. But I think he was just saying that basically whoever logged into that account seemed like they were the account owner or like a known person. So we can't say that this was a hacker or like it didn't seem like there was an account compromise. And we have a KYC'd account.
So what do you do with that information now?
Well, we were talking to law enforcement, I probably can't say like a whole lot about that, but law enforcement is involved. They're talking to us about it. And
seems like a dumbass move though, like to
go through a KYC.
Yeah, to go through a KYC exchange.
Well, I don't know how much of this I can say, but apparently they were leaving some amount of money on there. I guess it was safer on Kraken than it was on FTX. So, they're probably doing some trading. Maybe part of their market making operation was to trade on several venues to get the best price. So I'm not surprised that they had an account on Kraken. I think many exchanges have accounts on other exchanges to do, for their OTC desks, for example. Our desk might get a request to trade a token that we don't trade on Kraken.
Right.
So they might go use an account on another exchange to do that trade for somebody.
So going forward, what now? What do you want to see happen? I mean, we've talked about the industry coming together. I'm doubtful that will happen. Some people don't see it as one industry, but what else can be done?
Yeah, I'm really worried about the near term blowback and like knee jerk reaction from politicians. I think we really got to be concerned about just kind of protecting the ground that we have not giving up any ground in DeFi as a trade for some protection for centralized exchanges. I think we got to protect as much of DeFi as we can, because that's really the final like ground we can retreat to eventually. When things become too overbearing on the centralized system, I think we'll probably just continue to see more encroachment on centralized venues, and to the point where basically we're all just looking like PayPal all over again, which, will have strict KYC rules and everything, all the transactions monitored. Maybe you can't get an account unless, you can produce all this stuff, which will basically keep people out. The whole great thing about crypto is that these 2 billion unbanked people in the world have a rail of last resort and something they can turn to when the legacy system fails them or refuses them service. And, I think we can't lose sight of like what we're really fighting for here, which is like all of those people to be included in the financial system, and, financial privacy, the separation of money and state. These things are way bigger than any centralized exchange. And, I think we really need to fight to protect that ground that we have in DeFi. And, we could burn down all the centralized exchanges for all I care, as long as we still have that to fall back to, because we can always rebuild these centralized exchanges. But once we give up the ground in DeFi, like, I don't think we're going to win it back. It's just we're going to keep losing it.
What do you mean by the ground in DeFi?
I mean, what you can do basically like fully on chain without interfacing with a real company. For example, some of the bills that have been proposed are like, well, if you're to trade on a DEX, you have to be KYC'd, or to hold a Bitcoin wallet, you have to be KYC'd. And, we want to move to some kind of whitelist program where you go register yourself, at a local post office, and okay, now you have a wallet that you can use. And, I think that we clearly don't want to get back to that, because, then it's just like, it's an even more surveilled system than we have. The next step would just be to eliminate cash, and then they'd be like, okay, great, everyone use our CBDC on your wallets that you got verified at the post office, and if we don't like you, we're gonna blacklist your wallet now. So I think that the government will try to take little steps to gain ground, and people might see like, well, this is what Sam was arguing for. Well, we're just giving up a little bit of ground in DeFi to get this help for the centralized exchanges to be able to offer more services. But DeFi is not his ground to give up. He doesn't own DeFi. DeFi belongs to humanity. Like, that ground is all of ours, and no centralized exchange for the sake of their own business should be basically giving up this tool for humanity. It'd be like saying, Apple saying, yeah, we're happy to burn down all the libraries as long as you allow us to have our e-reader on the iPhone. Yeah, that's great for you, but like, what about everyone else in the world that like doesn't want to have to buy an iPhone to read a book? So, I think that's kind of what Sam was arguing for. And, I think we'll see more stuff like that, where people from the legacy financial system that don't have crypto values at heart come in and try to trade away what we have for some benefit to their own centralized business. So I'm really worried about that. Politicians have already come out and made statements. Elizabeth Warren has made some statements, which just like blows my mind, because out of everybody, she's always hating on the banks.
I know.
And like she's all for consumer protection. You would think that she would be all over Bitcoin as like her favorite thing. So I don't know what's going on there, but we obviously have a lot of work to do in Washington and to educate people. This is my top concern now, really, is just the blowback from Washington and around the world. And it was all over the world for Mt. Gox as well. It wasn't just in the States.
This is everywhere. Every UK news source I've been on, pictures of SBF and Caroline have been high up on the news listing, and it's kind of amazing to see, because usually they don't give a shit about what we do in this industry unless it's something like this. We never get the positive stuff reported. The stuff Alex Gladstein works on, who cares about, and
right.
It's everywhere. It's high drama, but it's fucking frustrating.
Yeah, really frustrating. And I think it's going to be a long time before we're past it. And we really got to like make sure that the narrative gets switched quickly to, this is like a scam artist. This doesn't really have anything to do with crypto, other than the crypto community is the victim here.
I think that comparison to Bernie Madoff it is a great one because they didn't close down Wall Street afterwards.
Yeah, exactly.
You know, they isolated him, and I think it would help to put SBF in jail. I think he is a criminal, should go to jail.
Mark went to jail, you know,
Yeah.
and arguably Mark was just the victim of a hack.
Yeah.
And, you know, I think there's some evidence to suggest that he tried to cover that up and he tried to fill the hole. And I think that's what it's going to come down to here as well is, you know, when did Sam turn from either getting hacked or, you know, from running a profitable business to actually misappropriating client funds. And he may go to jail, you know. If Mark did time, you know, I think that it's likely that, you know, obviously different legal regime, but I wouldn't be surprised if we see time for Sam as well. I hope that we get past the news cycle and get back to building. And all the companies that FTX invested in, you know, I think they had like 400 seed investments or something like that. Those guys were all required to keep their funds that they raised on FTX.
So they're all done.
Maybe. Are we going to see, was that the whole treasury? I mean, are there going to be 400 startups collapsing in the wake of this? That really had nothing to do with FTX other than FTX was their investor who required them to use FTX as their bank account. So, you know, I hope that we don't see 400 other startups fail, but the contagion, I think there's probably more to come.
More scrutiny on people in the future will be good.
Yeah, absolutely. That can't hurt. I hope people stay strong because, you know, we need everyone on deck to address this. And hope people aren't turned off from crypto. You know, it's a great thing. It does great things for the world. I think we need to tell more of that story as well of like, you know, beyond the speculation use case, you know, besides gambling on the prices, what crypto is actually useful for. I think that doesn't get enough publicity. And it's really doing great things for people and, you know, has even more potential to help humanity. And I think people are so fixated on the prices so much that we kind of lose sight of like what this is all about.
Yeah, man. Well, listen, it has been too long, Jesse, so it's good to see you. We should do it again soon.
Yeah.
I don't want it to be another couple of years next time. Keep crushing it. Keep doing what you're doing.
Thank you. Likewise.
Sorry to see you go through a bit of stress with this. I could just sense how, but like I say, for me, is when I read your thread, I was like, this is almost like Mount Gox PTSD. Like, why the fuck are we here again? I knew it. Yeah. So I'm glad you came in and talk about it and just stay in touch, man.
Thanks, man. Thanks for having me.